Hello, everybody. How's it going out there? This market, I feel like say this market is brutal at the beginning of every one of these. I'm ready to get off this train ride, man. Even right now, as I'm talking to you, XBIs just went red. Uh, ARC, which I don't own any ARC names, but that's a proxy for some of the crap I do own. It's only up 1%. It's just brutal. It's just day in, day out. And of course, Magnachip fell to like 15 yesterday, which was just crazy. But it is what it is, and it's not fun at all. But that's not why we're here. We are here to talk Magnachip and about the meeting I had yesterday with the management team. So the meeting was only about 22 minutes long. They came a little late, and it was the last 25 minutes. And I covered just about everything I wanted to cover. So I broke the meeting down into 3 buckets. The first bucket was the short-term risks of COVID and Russia. And regarding Russia, there's no sales risk. They say they sold less than $1 million to Russia last year. And on the supply side with the neon and all that stuff, he just completely dismissed it and said it's not an issue for them. So take it for what it's worth. We don't have to worry about the supply chain with Russia and Magnachip. With COVID, he said the South Korean factory is the safest place to be, and it will not shut down. So there's no risk from a South Korea perspective. He did say, and again, this is just me pushing him, that there's a factory in China, and if that factory were to shut down for an extended period of time, that would impact them because there's something being made there in that factory that they need for their products. I didn't get the sense at all that he was concerned about COVID in a material way. So that's positive. The second thing that I discussed with him was the most of the conversation was on the 2023 plan and the confidence around it. And I learned a lot from that conversation. So the first thing my takeaway from this meeting with him, and it was a pretty, it was a hard meeting. I was tough on him, and the purpose of this wasn't for me to come away feeling good. I really wanted to understand what the risks are here, and where his confidence lay. And I came away with extreme confidence that he has indeed sandbagged guidance for this year, just because he's done it every time he's ever given guidance in the past. Like I said, you can go back and look at 2019 and 2020 at every quarter and see what they guided to, and then see what they put up. Almost every time the revenues were above the range, and the gross margin was at or above the range. And I even accidentally said to him, do you still believe that Q2 is going to be the bottom? And he instantly looked at me and said, Q1 is going to be the bottom, not Q2. And mind you, we're, near the end of Q1 now. And I even mentioned to him that he's had conservative guidance in the past. And I think the setup's really good for the news flow in the future. And he said, yeah, we need to start getting back in the habit of beating expectations. So in the short term, I think all that news flow is going to be positive, just like I said last time I talked to you guys. Regarding 2023, as far as he's concerned, all of it is the capacity issue that he knows is coming online in the end of this year, or the middle to the end of this year. And it's as simple as him plugging that into the demand he knows is there, and 2023 explodes. So, it's not a case of a company that doesn't have visibility into their business. He has vast visibility into what the demand side is, and now he has visibility into the supply being there. So the beauty of this thing is that his 2023 guidance is so absurdly high that you don't need any of that to happen for the stock to work. I think it does happen, but I don't think you need any of that to happen for the stock to work. And the interesting conversation revolved around his long-term supply agreement. So while they have this new supply coming online this year, they've been working hard for many, many months to sign a kind of, as he would describe it, as a 15-year take or pay contract to basically double supply, so he can get to 1 to 1.5 billion in sales. And the problem with that, he said, is that they require $200 million in cash up front to sign those deals. And what he's doing is he's going to his customers and saying, pay for half of this, so he'd only have to put up 100 million. He said when that's done, and I might have misheard, but I thought he said it could be done the next couple months. Someone else that met with them said he said the next 6 months. I'm fairly certain he said the next couple months. When that's done, it frees up the rest of the cash on the balance sheet above and beyond what they want to save to do things like repurchases. Now, on the repurchase side, this is where probably the most interesting thing happened in the conversation. I said to him, you finish your 37.5 million ASR. You have 37.5 million left. I went through the whole thing with him about why I think that they should be buying back way more stock, that the balance sheet's overcapitalized. Amazing. The balance sheet's overcapitalized. And we went back and forth about it all. He says he pushed the board to get to the 75 million. They wanted 50 million. I said, it's not really 75 million unless you buy back the other 37.5 million. I go, how come you're not doing that now? And he said, I can't, discuss these things necessarily, or, because there's a lot of legal stuff involved. And I said, are you saying you're restricted? He goes, I can't say that, or I can't not say that, kind of thing. Let's just say, I would love to buy back stock here. And I said, well, that doesn't make any sense. You had a insider purchase, 3 weeks ago, and insider sale. So if you were not restricted then, why would you be restricted now? Clearly, you're not doing any kind of sales process or anything. And he said, that was a window that was open, and I wouldn't assume just because that window was open then, we have a window open now to do another ASR. So look, what do you take away from that? And then I also said to him, generally speaking, about selling the company, and he said he made it clear. He said they tried to sell the company the first time. Clearly, they're open to a sale. He couldn't discuss anything more to me about that, which was interesting to me. I talked about this a little bit on Twitter today. I mean, if you're the company and there's no sale process, you have no intent on selling the company anymore because you can't, right? We all agree they would sell the company at the right price. They did it already. But if you, at this point, knew that there was no buyer that was palatable to the authorities, and you thought you could only sell to South Korea, and you've already done scoped the landscape, and there is no South Korean buyer, I think at one-on-ones like this, you don't. I think you downplay all expectations of a sale, because I don't think it helps you 6 months down the line or 9 months down the line when nothing materializes. You don't have to say you won't sell the company, but you definitely don't make it appear that the reason why you're not doing a buyback right now or entering into another ASR is because you are actively trying to sell the company. Now, two things to keep in mind. If you go look at the JP Morgan ASR agreement that they filed in December, it's a pretty long agreement, and they actually can't enter into it with any material non-public information. So if they really did start a formal process in the last 2 weeks, which is exactly what that Korean article said they would do, that it was like January 10th, Korean article came out and said JP Morgan was going to start sending out feelers after they report earnings, then you can't enter into an ASR. Two, I lost my train of thought. What the hell was I going to say? Oh, two, I mean, he could be lying. He could be using the restricted excuse because he has no other great excuse for why they have not done another ASR, right? I don't know whether he's telling the truth or not about any of that. I have always thought, and I still think he's very aligned with us, this guy. You know, he's got like 500 or 600,000 economic shares. 200,000 of them are options that are at this strike price. He's been there for years. You know, again, we know they tried to sell the company once. So I'm not concerned about his alignment at all. And I was definitely not concerned with his confidence about the business this year and next year. So, you know, where are my? Oh, I also asked him. You know, just could we put aside the Samsung risk? You know, the idea that they would leave you, or maybe that's why your business is down. And he goes, he said that we have a new customer coming on that's bigger than Samsung, and I'm told that that's Huawei. But he also said that the Samsung relationship is fine, and that was the way end. And you know, completely dismissed it. So, you know, where does that leave us here? To me, it's the exact same setup that it was when it was $18 or $19, quite frankly. I think the numbers are going to be good, if not great. If they sign that long-term supply agreement in the next couple months, and let's say $100 million goes away, then they're left with what he described as 175 million of net cash, kind of current assets minus current liabilities. And if he really needs 100 million of cash in the balance sheet for working capital, that leaves 75 million of excess cash. So I would expect them to, you know, aggressively or semi-aggressively deploy that back into a share repurchase if they're not selling the company. And we all know, as I've said about a million times, that the last playbook they did in the fall of 2020 and the winter 2021 was to leave the cash in the balance sheet while they went through a process, not to aggressively redeploy it back into the company, which I guess you could say they weren't even able to do, which would jive for the reason why they can't announce a new buyback or a new ASR. The funniest thing he said was, I told him I've been involved for years, and I told him, you know, I'm a fairly large shareholder. I told him how many shares I own, my family owns, and he goes, "Why didn't you sell when we announced our deal?" And I laughed, and I said, "Well, unfortunately, the other thing I do besides buy value stocks, I should have said besides buying shit Korean, you know, NASDAQ listed, New York Stock Exchange listed Korean semiconductors. The other thing I do is I like to do risk arb. And when you're trading at 23 and it's worth 29 in 6 months, and I didn't have to finish," he goes, "Oh, yeah." So I thought that was pretty funny. So yeah, that was my main takeaways with everything. Let me see what the questions are here, and if I think of anything else, I'll get back to you. Were they fully booked with one-on-one in the day? High demand to see them. I think they had meetings the whole day, but I don't know for sure. The reason I asked is an outsized move while doing one-on-one all day seems unusual. Glenn, the stock was down before the one-on-ones even started yesterday. So, you know, the first one was probably at 9 a.m. or something, or 9:30. I think the stock was already at like 15:20 by the time that happened, 15:30. So I would not figure anything has to do with the one-on-ones. And in fact, I was in the one-on-one, and I know what he said. So nothing was negative in the one-on-one, hence why it's up 4% today. So I kind of missed the beginning. So your takeaway was that this will be a 1 billion revenue company in 23. Any chance that has decent margin? Oh, no. No, not 1 billion revenue in 23. He said they need to sign a long-term supply agreement to get to the $1 billion, $1.5 billion revenue range. No, to get to the 600 or 650 million, they can do this. They have supply coming on for next year. So no, my takeaway was that their guidance for 2023 is achievable, which is, you know, 30% growth from this year, something like that, 35% growth from this year. Any chance that'd be decent margin? And when we learned about that Huawei win next month, they said they got a major win from a Chinese manufacturer. They already told us that. They just never named the name of it. He didn't tell me Huawei. Somebody else did. Hello, thanks for sharing your takeaways, Matt. Of course, I wish we were all making more money right now. Trust me. Yeah, there was nothing that alarmed me in the conversation. If anything, if anything, after the insiders trades 3 weeks ago, I assumed that they, I think they would have really downplayed any possibility of a sale in the near term. And again, he didn't tell me that there was any kind of process going on, nor could he. But he did in no uncertain terms tell me that they might be restricted from doing an ASR for legal reasons, and then also in no uncertain terms that they're definitely open, to a sale or any form of it. So I was pretty enthused by it, and I would think that if he's not lying about anything, if it's the truth that he's telling me, then a private equity or strategic buyer can do the same research into the supply agreements and the customer demand and be comfortable paying a premium today without seeing the numbers flow through at the end of the year. Yeah, that's right, Fat Eddie. $2 a share of excess cash is all they would have left after all that. It's it's confusing, right? Because they have to put 100 million into this supply agreement, but that's not an expense, that's capitalized. And there's value there for a buyer. But yes, that does not mean that there's more excess money for a buyback or anything like that. Less than I would have thought. They weren't going to do it anyway, right? They weren't returning the $7 a share cash to us. So all I was focused on is doing the other 37.5 million, and then selling the company, right? I didn't expect a more aggressive repurchase. Shots on goals here. So shots on goals here. Additional customer wins, achieving guidance, additional repurchases. Only short-term has really some big deal announcements, which could end up being long-term. I think you have numerous things that could happen in the next 4 months, like a lot of things. So first of all, at any time, an article could come out from a more reputable news journal organization that says that they are, in a process. Now, there was no article that came out last time. It was a Korean paper back in early March, and they sold the company 3 weeks later. So that could happen at any day, right? And that could send the stock up 25%. Okay. The second thing would be if they sign that long-term supply agreement, I would think the stock would go up pretty significant on that. It would alleviate all concerns of anything like this happening again from the supply side, and that's a huge part of the risk of the story, right? Why it's trading where it is. So I would think the market would be pretty receptive to that long-term supply agreement. Third, we're now middle of March. They report first quarter earnings in 6 weeks. I expect those earnings to be much better or than guidance, because they sandbag. The COVID thing hopefully doesn't have a minor impact from China in the second half of this month. But then I expect the guidance for quarter two to be better than what the street's at. I looked at the numbers and I think they're all too low based on what his guidance was last time, which is that quarter one's the bottom. If you look seasonally, quarter two always gets better than quarter one anyway. And I think that it's all too low. And three, you could have just a full-on sale of the company in the next 4 months. It took 18 months to sell that. So that process, Eddie, was different and more complicated. we know how long it took to sell the company this time. They basically went in full process mode at the end of September. And then you had October, November, December, January, February, March. So it took 6 months from full process mode to sale. But this is round 2 of the same thing. They've already done that once. So I don't think it takes 6 months again. And I don't know when you start the clock. The clock doesn't start today. The clock probably started in the beginning of January in some manner. So for me, it's very feasible to see that they could sell the company in the next 3 months. Now, I don't think that that's my base case, but it could definitely happen. And that gets you to April, May, June, mid-June. If I had to guess from here, they try and sell it for parts for the next couple of years. Well, they only have 2 parts, the power and the display. And I have no idea from a tax perspective what it would be like if they sold one and they sold the other. There could be huge tax leakage if they did that. AXSM, the longer it goes, the less likely there's a CRL. My thoughts haven't changed there at all. I'm frustrated with XBI and with the movement there. My whole position is June call spreads. I have that April, June put spread, calendar put spread that's not working because we haven't had news yet. And it seems impossible for them to serial at this point. I think the serial would have already came. I think at any point, any day we can get an 8K that says that they are in labeling discussions, or we can get approval. The management team's doing another round, fireside chat tomorrow, I think. I don't expect them to say anything because nothing to say, I don't expect any major news before that fireside chat. They should sell power now and then wait for display to gap up, right? Yeah, I guess that's true, Eddie. That's what you would do. Power is really strong right now. You would sell power now, and then you'd wait for display to explode next year, and then sell the company with display in it. If they were going to do it that way, it makes more sense to me. You sell the whole thing to a private equity firm, and then the private equity firm breaks it up, because the private equity firm would have a higher cost basis, a step up in basis with the whole company when they purchase it. So they would be able to break it up, I think, in an easier way than Magnachip could sell it now in a breakup scenario. But I'm not an accountant. I'm getting more and more people joining this right now, and I'm almost at the end. That's pretty sad. I still love SHLX. That hit 1365 today, which is crazy. You need a K1 for that, but you should go back and look at my YouTubes on SHLX. It's from a few weeks ago. There's no reason that I don't think my thesis on that could change at any point. The market could be down 20%. My thesis on that would change. So that's just kind of wait and see what they pay us. It's down a little bit because of oil and gas, which is hilarious because it has nothing to do with oil and gas. Zendesk is pretty frustrating. I made that bigger with call spreads, and that's down 2.5% today. And that's extremely binary. We're just waiting to see whether or not the private equity consortium actually makes a bid. March 1st was the day the article came out that said they were preparing a new bid with the new loan facility, but the markets have gone haywire in the last 2 weeks. So it's pretty hard. I think ARC since March 1st, let's see what that's done. I'm scared to look, quite frankly. Since March 1st, ARC has only gone down in a straight line from 70 to 54. It's down 20%. So if and Zendesk is not ARC, but it's in that field, in that world, if that comp is down 20%, that's got to make it a little harder to do a levered buyout of a very high multiple technology company, unfortunately. Any other questions, comments, concerns? What would make me change my mind? Well, I'll tell you one thing that would. If we got to Q3 and he downplays Q3 and Q4, either from a supply or a demand perspective, either side, that means he's got no control over the business, right? No visibility and no control. I probably would sell my stock then if that happened. I would also sell my stock if he materially brought down 2023, right? If they don't grow by 15% at least next year, I would sell the stock at probably any price. So I don't think either of those things are even remotely likely to happen. But that's where my intellectual honesty will stay in here, is if the confidence of the management team in something that they claim to have really good visibility with from both supply side and the demand side, if that disappears, then what am I holding? What am I left holding here? Anything else, guys and girls? All right. Oh, anything at NPY or just looking for beta to be back online, and in the near term, it's just pegged to oil. I mean, I can't believe AMPY. Oh my, it's only down 2% now. I can't believe that was back to 5. I think the AMPY setup is amazing. I mean, if they do restart beta, which it seems more likely than not that they do, I didn't think that was even possible before. The stock could double, or at least go to the high 7s. I also think you'll have a breakup of the company and an eventual sale there. So it's just moving with oil right now. That's all. It's nothing to do with AMPY. My strikes, my call spreads in AXSM are 40-50 June's call spreads and 40-55s and 40-60s. It's mostly 40-50s. My biggest concern with AXSM is that they get approved and then the stock goes to 40 because we have a terrible, terrible biotech tape. So I don't know what, I've been very disappointed with AXSM. And, it is what it is. But that's the problem there. And I won't own stock anymore for some margin purposes, and because it'll go to $10 if they get a CRL. So I'll tell you one thing: if it goes past June, bye-bye AXSM. You won't see me be involved in it anymore. But I feel pretty good about it being done by June. Have you looked at CLMT? Kind of up your alley, but it'll take some time. I don't know that at all, Eddie. I'll write it down though. Right now, I'm kind of tight on margin, so I need something to free up before I put on a substantial new position. All right. Everybody stay safe out there. This is a tough market, man. And I'm feeling it because, I run exposed. Short indices and IB does not free up margin, Eddie. It makes me add margin. The Interactive Brokers is such a bad broker that it does it for me. Show me if I try to short like SPY right now. Let's see what happens. Let's see what happens. I'm telling you, it doesn't free up anything for me. Nope. Doesn't work, Eddie. I'm telling you. I've done that all those games, selling the calls. Yeah, I've done that game. Let's see, IWO. That's very interesting that for you, it frees up margin. For me, it adds margin. Any new short exposure adds margin for me. Yep, confirmed. Yep. It adds margin. Unbelievable. For you guys, I just tried IWO. I can show you a screenshot. It adds margin. If I try to sell 1,000 shares of IWO at 238, so it's a $238,000 trade, it adds $35,000 in margin for me in both initial and maintenance. So 238,000 adds like, 12% of margin. No, selling it. I hear you. Shorting it. Oh, it is stupid, Eddie. Interactive Brokers is the dumbest brokerage that ever existed. They don't want me to take risk off. Trust me, I've thought about all this. I can't put in a I can't put on a hedge because it adds margin. I haven't talked about TPB. I put on a new position a few days ago. I purposely didn't bring it up, Kevin, but I could bring it up real quickly here. TPB is Turning Point Brands. I made it a position yesterday, 2 days ago. It's not really the kind of thing I usually do. It's a tobacco company, but really a rolling paper company. And I look at it as kind of a low risk, counter-cyclical value stock that's been destroyed for two reasons. It got destroyed because the new CEO says he might do some crazy M&A deal, and people think it's going to destroy value. And then the second reason it got destroyed was there were some vaping issues from a regulatory standpoint. So that's why it went from like 50 to 40, and then from 40 to 30 on the CEO doing the M&A talk. So I think it's kind of a good setup here, given he's trading at less than 10 times free cash flow with a free option on vaping, and the FDA somehow approving their shit. And I think it's very unlikely that the CEO will do some value destructive M&A deal when you have a controlling shareholder on the board. So that's why I own TPB, but it's not anything that I'm, super enthused about. But it's definitely worth doing some work on. You can read an old Vic write-up for free on valueinvestorsclub.com, and you can read some of the messages there. But the write-up's just from last summer, and from then, and it was $50 back then. That's a huge move for a value stock. So anyway, hey Matt, what is your sense of the possibility to put 200 million to get more supply? I think that's very low, because the CEO is basically saying he wants to do 100 million, and then the customer is going to put 100 million in. So I think it's a very high probability they do 100 million. They burn 100 million of their balance sheet doing that, and then a customer puts in 100 million. He's constantly trying to under promise and over deliver. So if anything, it'll be less than 100 million, is my guess. How can we verify we participate in the BMR class action? How in communication from IBKR? Theo, good answer for you there. Every person is a member of the class action for BMYRT. If you held the stock through the delisting, you are a member. You do not need to opt in. If and when there is a settlement, one of two things will happen. Most likely, you will get paid automatically through your brokerage, but there's also a chance you'll then have to opt in after the settlement to get paid. So there's nothing for you to do now. Okay, you're good. And I promise I'll have a YouTube if the time ever comes that we get a settlement. You'll be seeing champagne and fireworks behind me. I'm pissed off that all of you guys can short indexes, and that removes margin and doesn't do it for me. Maybe I'm just too exposed. I have too much gross exposure, and they just think it's like layering on too much in one portfolio. I really don't know. But yeah, I might have tried that. I do a lot of tricky things. I guess that's it then, Theo. That's the reason. Like I have tons of things like AMPY, I have things like AMPY call spreads, and MX is, a 65 or 70% position. So the algo probably says it doesn't remove any risk there. Don't try this at home, as I like to say. Anything else, guys and gals? I would bet that we are above $20 in MX by the time they report quarter two earnings in August. Is that a great thing? Having to wait whatever that is. 6 months, not 6 months, 4.5 months. But I mean, $4 on 16, is what, 25% or something like that? Yeah. And I think that's pretty conservative. I think $20 is a conservative thing we'll be at come August, because come August, you have a gazillion, possible outcomes over the next 6 months, from a sale to accelerated earnings in quarter three. Quarter three guidance should be great, and then quarter four guidance should be even better, and then you're into 2023. So all of your issues are behind you. One thing I like, actually, I think I might have said this before, is I can't put them on anymore because I have no margin. But if you want to find a way to size up, it's the Jan 20 calls. I probably would just buy the Jan 20 calls, try to middle it. But you could do Jan 20, 25 call spreads, is what I did in the past. But I mean, that's a way to where if you do get a sale at $28, you could make 4 or 5 times your money on the calls. The sale could be $30 for all the reasons I've outlined in the past. And it could close by then if you get a deal by June. All right, I've talked enough. Bye, everybody. Take care. I'll see you the next time there's news on one of my names. Thanks for listening.